Next up, we have Chris Reid, Managing Director and CEO of Neometals. Chris has over 30 years' experience in the mining industry, including more than 20 years in senior executive roles. He co-founded Reid Resources, now Neometals, in 2001. Chris holds a Bachelor of Commerce from the University of Notre Dame and a graduate certificate in Mineral Economics from the WA School of Mines. Over to you, Chris.
Thank you very much for that introduction, Jane, and good afternoon, ladies and gentlemen. It gives me great pleasure to tell you about Neometals. We, to my mind, we're the first urban miner to present at diggers and dealers. We're actually getting paid to process material. Green and battery materials is what we're all about. So, we're currently producing battery materials out of a plant in Germany, and today I'll focus most of my presentation on that. In terms of the disclaimer, you don't have to look far to find stockbrokers around here, so before you buy any stocks, you should always talk to a licensed investment advisor. So Neometals, we're an emerging sustainable battery materials producer. Three of our main projects, the main one is around the lithium battery recycling. We've also got a vanadium recovery from steel slag and a lithium chemicals project. Underpinning those are technologies that we have developed over the last 10 years, the battery recycling over the last 6. We've got 16 granted patents and 54 patents pending. So our commitment when we went along this process was, one, we're trying to maximise the efficiency and maximise the recovery rates. Two, we designed these to be very, very sustainable. So in terms of, the materials and reagents that we use, were designed to make them very, very green and sustainable. And fortunately, we've now had these massive ESG tailwinds around the carbon. And all of what we produce is low carbon because when we recycle or material recover, we absolve the material of all its carboniferous sins, i.e. all the upstream mining. Backed by a very strong balance sheet and a strong growing team. In terms of our portfolio, we've only got one mining asset left in Australia. We demerged our nickel assets last year into Widgie Nickel. That's going along very well. That was a $26 million return back to the shareholders. But we've got a distinct focus on Europe and North America. They are the largest battery producing areas outside of China. I haven't got balls big enough to go in and operate in China. So the lithium battery recycling, we developed that technology here. We still own 100%. We will soon give 50% to our partner. And as you'll see in the coming slides, we had a look at it, we get it. There's going to be more EVs, there's going to be more lithium batteries, and we're really, really convinced that these batteries wear out. So we moved from upstream mining at Mount Marion to the other end of the supply chain. We put ourselves in an uncomfortable position. Doing that, we did make a lot of money out of the mine and we persisted with the R&D, and now we find ourselves at the forefront of lithium battery recycling globally. Our partner is a 150-year-old German plant builder because we didn't see the ore body or the feed as the limiting factor of success. It was indeed who can build the plants and who can build them at scale in the right amount of time. So following on for that, I just want to show you, why we chose this. So if we have a look at the target market here in Europe, and we have a plant operating in Germany at the moment, in just 6 months, the total addressable market, end of life, production, scrap, what have you, in 6 months grew by 27%. And so in Europe, the target market's going to be somewhere around 300,000 tonnes of batteries needing processing in 2025. The total installed capacity at the moment in Europe is 70,000 tonnes. Sungil at 10,000, Umicore is 7,000, Glencore is 7,000. It's a very, very attractive business. I bet you didn't know that the biggest battery materials recycler in Australia at present is Murrin Murrin. Glencore buy batteries, shred them, and the black mass gets shipped from the Northern Hemisphere and goes up and gets put into Murrin Murrin. Unbelievable. So in the short term, we've got to build that capacity. We believe we're one of the few people that actually can deliver that capacity with our partner. And then in overall, in terms of how much of a long-term business, we're down here in 2022. So, for us, it's about deploying those plants and then scaling up with the market. It's just such a fantastic opportunity. And look, to start off with, we're in it for the money. So, there's a need for short-term capacity and a long-term for scale. So we designed these plants, the 50-tonne-a-day plant to take the production scrap off a gigafactory. And then we thought, well, we're going to have to scale up to 500 tonnes later on to accept the 90% that get out of the battery factory and into the cars. And what we've discovered is the plants are too small. It took Panasonic 5 years to get the scrap rate for the Tesla gigafactory below 20%. And then there's these recalls, right? And so what we're finding is, the Hyundai guys had the Kona, General Motors had the Volt and the Bolt. And all of a sudden you got 200,000 odd battery packs that weigh half a tonne that need to be recycled. That's more than the global recycling capacity. So it's a fantastic problem to have. And so if I put, into context why we got out of lithium mining and into these, well, we get nickel, cobalt, manganese, lithium. We get them at the bottom point of all the cost curves. In fact, at the moment, we're getting between 1,500 and 1,650 euros a tonne, and these guys are dropping it at the front gate and saying, keep it. It's unreal. But to put what our batteries will look like next decade, not what they look like today, but they're thrifting out cobalt, more nickel, so they're essentially a nickel ore body. So a tonne of these batteries is the same as having a tonne of material ore that's 15% nickel, 15% copper, 2% cobalt, and 2% lithium. The other half of the material is graphite. It doesn't digest when we put it in the hydromet refinery, so it doubles the grade. It's insane. So, when we decided to head there, there wasn't a process. So we had to design a process from the ground up. And so, first of all, got to be safe, so multiple safety redundancies. You shouldn't put these batteries in the ground. We've all seen that there's fires when you store them. Even in crashes there can be fires. If you overcharge them, there should be, there's fires. So safety's been an important driver. But then we've had everything come back. Europe doesn't have the raw materials it needs to make the batteries. The US does, but doesn't have it, well, has it in the ground, but doesn't have it in production. So all the legislation has been leading to making recycling compulsory. And then they're increasing recycling rates, and then we're moving to minimum recycled content. So every producer of lithium, nickel, manganese, cobalt has to have recycling in its mix by 2030, if not sooner, by the customer. And then, as I said before, with this whole ESG trend and carbon, you do face the fact that these EVs have twice the carbon footprint than a normal car because of the battery, because they've got such long supply chains. Like, we used to crack rocks out the back here at Mount Marion and send them to China to then go to Europe. You'd have nickel, and it could be pig nickel, it could be nickel from Murrin, going up to get refined into nickel sulfate sent off. You had cobalt that had become hydroxide and get a plane ride to China from the Congo. They've got big carbon footprints. So the surest way to reduce your carbon footprint is to do hydromet recycling. All of our incumbents were smelters. They were pyromet recyclings that had crappy recoveries. But for us, we get really, really high recoveries, and we can strip 95% of the carbon out of out of all the battery materials feedstocks. So here's the solution. So, we vented in Australia, we piloted it in Canada, then we did the deal with the Germans, and during COVID, we built the plant that you can see in front of you. So I'll just give you a quick run through of what it looks like. Stage one is really like a bit of a base metals concentrator. That's the best way to look at it. We call it the shredder. So we're putting in those cells. They can be up to about 30% charge. Anything above that, we've got to discharge it. So we shred those. give them 2 shreds actually. And then what we try to do is to take the black mass, which is the anode and cathode that's got the valuable material. It's pretty fine, that goes down into the tanks. The aluminium and the copper sheet, the plastics, the casings go up. We then put them into air classifiers to sort of split out the heavies and lights. These aren't a revenue generator for us. The aluminium and copper scrap you do get some money for, but all the money's in that black tank. The little shiny bits are the bits that we don't catch. So what we then do is we take it over and filter that. We get a wet black mass. That's the red drums. We take it over and we dry it. So at the moment, that's sort of an intermediate product. And at the moment, we are selling that to smelters because the legal requirement for hydromet recycling is not until 2025. But ultimately, we need to close the loop for these car makers, right? For their own sustainability goals and, to relieve the stress on their mineral supply chains, because none of these guys know how they're going to get the material, let alone the price. So if you're in battery materials, you're in the right space. So we take the black mass, we dissolve it in sulfuric acid. Pretty simple process. We take out the copper sulfate first. Then we sparge in ammonia gas for the pH adjustment. The important part with that is our tailings product is ammonium sulfate, right? It's a fertiliser. So it's a very, very green process. I'm going to have to skip through here. I've only got 4 minutes left. Let's go to the money side of things. So if I take, our total site operating costs and divide it just against the nickel with only the cobalt product, we get 8 revenue streams. We're the new lowest cost nickel producer in the world, so we just got to get bigger. Which has been great. We've got flexible business models. We're preparing our business to make less money over time as that volume ramp up. So we provide disposal services as a principal at the moment to the German car makers and cell makers. We've also, in partnership, we will share that money if there's a pathway to more volume. And ultimately, in a license agreement, which I'll go into with Mercedes-Benz in a minute, we are licensing and plant supply for the really, really large volumes. It's a volume game. So we've got a 10-tonne per day shredding operation that's operational in Hilkenbach, Germany. We've done a agreement with Mercedes-Benz where we've just started the front-end engineering, and we expect that we will start construction of their plant in December. The ground turning ceremony at Kuppenheim is nominally November. We're going to put a 50-tonne a day plant for Steel Company of Canada just outside of Toronto. We've got an MOU with Itochu, and these are just the public deals. We've got a whole pipeline of other ones. So look, being selected by Mercedes is probably the greatest third-party endorsement that you can get of your technology, right? 16 months was the qualification process, so we've done pretty well to get through there. So the Mercedes guys, what we're doing is for 5 years we're going to collaborate, so we build them the plant, we teach them how to recycle. It's royalty free for 10 tonnes a day, which is nothing. It's a couple of thousand tonnes a year. These guys are going to have 1 million tonnes of batteries that are going to need recycling per annum next decade. So for that, we're going to go and build them a plant. So this is our plant that you can actually see, that 96%, that is a Mercedes target. That is not justified by any study we've done. We're only at 85, but they do drive you to work harder. So Steel Company of Canada, what we're doing there is they produce high quality steels that go into the car makers. The car makers are all pushing them to have lower carbon steel, which needs more scrap steel for electric arc. Then they're saying, well, we need a solution for the batteries that are being attached, and hence us. So what we've done is we've given them a license, and we've got a buy-in option to take up to 50% of that business. And we will start that in December. There's a timeline. All roads lead to December. In terms of sustainability, people say, it's in our projects. So low carbon from the battery recycling, negative carbon for some of the products. We made the finals of the German National Sustainability Award for 2022. It's a pretty tough pretty tough ask, so we're very, very happy. We're doing our third sustainability report, and we have life cycle assessments pretty much every year across our projects because we've got to show that we actually are green. We've got a fantastic team. I dare any company to get to gender balance before we will, from the board right down to the reception. In terms of a corporate dashboard, we've got about 90 odd million bucks in cash and investments, no debt. So I guess as a highlight, I've run out of time, but you know, these are really true ESG projects, not just trying to greenwash an old carbon and, you know, paying for carbon and that sort of stuff to offset. Underpinned by our proprietary technologies, we've got scale, strategy, a strong balance sheet. And thank you very much for your attention today. I will get off, Jane.
Thank you so much, Chris. Unfortunately, no time for questions for Chris, so please go and visit Neometals at their booth.